Our market monitor is bullish on the markets, and not just because of those new records this week, but he's been pretty positive since last September. Let's bring in Caron, market strategist at Stifel. Hi, Kevin.
Hi, good to be here.
You know, it's really nice to see all of these milestones on the Dow, but you know, a lot of investors are pretty nervous about investing in this market. So make a case about why the individual investor should start looking about putting stocks in their portfolios.
Well, it's our view that fundamentals have been improving and are continuing to improve, and that valuations for equities overall are relatively reasonable. So what we're looking to do is continue along a path that we began last fall, overweighting equities in portfolios and focusing on the highest quality stocks that can provide us what we think is a reasonable rate of return. Bill Gross just talked about a 6 or 7% kind of return for equities, and I think that that investors should be looking for those kind of returns from the most consistent kind of companies out there. And I think there are names in there that can benefit from an improving economy.
All right, let's talk about some of those high-quality stocks that you were just mentioning. First on your list is Norfolk Southern. This is NSC on the NYSE. Tell us why you like this stock.
Well, it's not getting any easier to move goods around the United States. We have, after all, a rising amount of exports coming out of the United States. Exports have doubled over the last 15 years, same with imports. These things need to get to and from ports and places of business. Roadways are getting more congested all the time, and railway companies such as the Norfolk Southern have the ability to provide the lowest cost transportation for those goods. So it's a natural in an environment where capacity is constrained. We like it. We think the stock can trade easily into the mid-80s.
Oh, okay. Let's move along to Walmart, which is another one of your picks, and you liked WMT. Even given that consumers are feeling a little bit like penny pinchers these days?
Exactly. In fact, the fact that Walmart is in a market that caters to consumers who have tight budgets. We know that employment is increasing. We saw those numbers today. But when you look at underlying wage growth, it's positive but very meager. So we want to look for companies like Walmart that cater to that. I think they were a little slow in executing coming out of the recession. Many of the other dollar stores took away market share, but I think they're executing better now and have tremendous clout in the global market to provide customers who are value-oriented with a needed product and service.
All right, Microsoft is another one of your picks, MSFT. It's been having a lot of issues with its Surface tablets, smartphones, even its Windows 8 operating system. Why do you like it?
Well, nothing ventured, nothing gained. Microsoft has been looking for a new product for quite a while, and it's reflected in the stock price. If you subtract the debt, and they do have about $7 of cash on the balance sheet, you're looking at a company that's trading at essentially 7 times earnings, stripping out the cash. So ultimately, if something positive does happen in terms of tablets or perhaps mobile, this is a company that would have a lot of upside and a very good dividend to boot.
All right, a lot of good information. We have to leave it there. Thanks a lot, Kevin. Do you have any disclosures to make?
Stifel does make a market in these securities.
All right, Caron of Stifel.